What is up, guys? My name is Hassan and welcome back, everyone. As you guys are all aware, due to the coronavirus worldwide, the stock market and the S&P 500 took a massive dip. So I want to show you guys the chart. So if we click on the S&P 500 and we go to our one-day chart, is saying that we're down 7.6%. In other words, we're almost down 8%. So if we look at for the 5 days here and I just scroll, we can see that it's down about 11.3%. And then if I go to the 1 month and it gives us that we're down almost 11.3%. So this gives us a perfect opportunity to buy this dip, or this opportunity to get our shares at a bargain price. Now I want to show you guys one of my portfolios on how it's doing. So here we have our one-day chart. My portfolio is down about 9%, and I'm going to talk about it, why it's more down than the market. And now we're going to show you guys about for the 1 week chart. Here I'm down about 11.6%, and then if I take you guys to my 1 month chart, I'm down about almost 16%. And then if we go down for the 3 months, I'm down about 12% or 11.9%. So this dip that we see right here, this is a perfect buying opportunity. So now I want to show you guys how much money I've been contributing to my stock market portfolio. So I actually shared this with you guys in my previous video on my buys and sells for the month for January and February. So if you guys haven't checked that video out, make sure you guys take it out. So this is how much money I deposit on a monthly basis. You can see May, June, July, August. So if we follow this chart, normally I'm adding about $400. Due to the coronavirus in the last month that has been spreading worldwide, I added $1,500 almost right here. So this shows that if we're not taking this opportunity to buy, this is actually a problem. It's going to cause us, we're going to miss out on this opportunity in buying and accumulating more shares. I'm not saying to put in $10,000 all at once. I'm saying that we should be doing a little bit of buying, or somewhat of aggressively buying this dip, or slowly aggressively funding it, but buying it slowly as we dollar cost average down. And at the same time, that if we're not buying in this dip, then we have a problem, because these are the opportunities that we wait for. So even though my account is, you can see that it's down massively, but I'm still getting my dividend payment. So I'm going to take you guys to my M1 Finance portfolio here, and I'm going to show you guys the dividends that I've been receiving. So if we go down to activity and then click on here and just click on only on the dividend, and here, so we can see here for the month of March, Pfizer paid me $3.13, Honeywell $1.50, 59 cents, and then I got Skyworks Solution 63 cents, American Software $1.38, VET $5.80 here. This is the Canadian dividend, which I actually get back on my tax return. I have PetMed giving me in February, giving me 16 cents, and then in February I got 243. So even though my portfolio is down, but I'm still getting paid. So let's go back to my main portfolio, or my M1 Finance, and if we look at it for the 1 day, or if we look at past 1 year, it says that I'm down massive, about 27%. But if we look at the dividend here, I already earned dividend is $252. For this year, I already received this cash payment. So another thing, this is only from one in my portfolio. Another thing that I want to show you guys is my Robinhood Income. The Robinhood portfolio that you guys saw, the monthly income I've been getting month after month. So here you can see January was 0, and then we can see October $18, November 23, December 42, January almost $20, February was $23. So we're averaging almost in the last 6 months about $26. So you can argue that it's not much. This you can argue that this is not a lot of money, but in the long run, month after month, it adds up. This is only from one of my account, or I have multiple accounts. It doesn't make a difference because some people say it doesn't make a difference, but I think it does, because I can take this money that I've been getting month after month, I can reinvest it and let the compounding work. And we know that how compounding works, that it in the beginning it starts slow, but over time it massively increases. So here I got 217. The other one I showed you about 200 and something dollars. That's like almost almost $500 of monthly income, of yearly income I'm receiving just by investing in these companies. So guys, my name is Hassan. I've been investing in the stock market for 10 years. And if you guys haven't subscribed yet, make sure you guys hit the subscribe button, hit the like button. It helps the channel grow massively, and I can reach out to more people. So the next thing I want to show you guys is the S&P 500 historical PE ratio. Here we have about for 30 years. So the gray area here shows us when the recession. The S&P 500 is at 22 PE, which is, I think, is actually not a fair value. So even with this recent dip that we had in the last month, we still haven't reached a fair value. I still think it's above average. So here, remember everybody that in December, in December 2008, we had a huge bargain at the S&P 500. I think was at a fair value of almost 19 or 18.9%. Currently, it's at 22, which is higher. But I think that we should be doing some buying now, and if it goes down more, we should be adding even more. Like for example, today the S&P 500 went down by about almost 7%, and I added another $200. So if it continues to dip and continues to pull back, I'm going to be continue adding money and funding my account. Another thing I want to show you guys in that we had a recession in 2001, and then we had a recession in 2008. So in 2008 or 9, it was at 116 PE, which is a lot. It's crazy. And then in 2001, the PE was around 46 before it started to create a decline. So by us analyzing this chart and looking at this chart, we're currently at a 22. So this shows that I don't think we're going to head into a recession unless the coronavirus plays a huge role in our stock market, the economy, the people, the health, the school. Everything starts shutting down. If we have something like Italy or China or Iran in the United States, then we will definitely head into a recession or have a great chance. Besides that, by just like analyzing the PE and with the recent pullback, I don't think we're going to head into a. The next thing I want to cover is a major event that took place in my Robinhood portfolio. Is that one of my company, VET, Vermillion Energy company, they cut their dividend. So what did they cut their dividends by? So if you go to a Seeking Alpha, they actually do a good job on explaining some of the concepts. So this Vermillion Energy, it's actually one of my riskier companies. This company I usually don't recommend to most people unless they want to take higher risk. So Vermillion Energy halved the dividend, and they also state that the future dividend is questionable. So here they're saying that they cut the dividend. They're paying, I think, I was receiving about 15 cents a month. Now it's going to be around like 7 cents because they cut their dividend. Another thing they said that shareholders should expect further dividend reduction unless the oil and gas prices recover. And lately we've seen that it's very hard for oil and gas prices to recover, especially with Saudi breaking off from their agreement, not breaking off, like they're mass producing their oils and selling it to Asia. Based on my understanding, I think the oil price is not going to recover anytime soon, or at least it'll be months before. So for us drivers, people who drive, it should help us because we should get a lower price. So the point is that one of my companies had a major event, VET, Vermillion Energy. They cut their dividend by half, and the company tanked. The company, you can see here, and then once Saudis reported their out saying that they're not gonna cut back on the production, which is they're gonna add more supply to it, putting oil prices down. And with the coronavirus and everything else that's going on, it went down in the 1 week. It went down 59%. So at this point, what do I do? Do I sell or do I hold on? I feel like it's already went down too much, and at this point, I'm not adding anymore, nor am I selling. I'm just going to ride it. I'm going to collect my monthly dividend. I knew that this company was a risky company for a while with, so I'm going to show you guys a proof why I thought that. So here, you can see that February I got $7, so now I'm going to get half of that, maybe around almost $4 or a little bit less per month. So $7, and then so if you look at the chart here, the last time that I bought a VET company was a while back. So if we scroll down, we should see that the last time I bought any shares, I bought one share, was in October. That was almost 5 months ago, and then, or 4 or 5 months ago, and then before that I bought it in so we have October, and then I bought it in September, and so on. So knowing that I have about 50 shares, I know that this company is a little bit risky, so that's why I accumulated 50 shares, and I think that that's the most I want to invest in this company, because I don't want to invest too heavily on a company that can future cut its dividends. And we can see that from this article, they might even decline it even more. Guys, we're going to call it a day. As always, thank you. If you haven't subscribed yet, hit the subscribe button, hit the like button, leave a comment below on what you guys think of VET. As always, thank you. See you next time.